Hey guys, welcome back to the channel. My name's Jared from Click Capital and I'm your host. I've been trading for almost 20 years. I've worked in an investment bank. I left the investment bank to create my own product for hedge funds and proprietary traders software product, and I've been trading for myself ever since. Unlike a lot of other YouTubers I see out there, I can actually see them using their paper trading accounts to analyze the markets. I actually trade, manage client strategies, and I'll let you know my positioning as well in every video I do after the market closes. So if you watched my video yesterday, you knew I came in today 80% net short, but I did say that we could see a jump up today as we've been pulling back to this trend line, and that's exactly what happened today. We actually gapped down pretty good on the open, and I was watching the open to see if we held, which we did. So I quickly moved the portfolio back to flat and have done okay. And the market is kind of just consolidated up to lunchtime. Then come 1:30, it just ripped higher right into the close. We didn't quite get to 4,000 on the SPX, but we're just sitting here at 39.81 on the 15-minute chart. Let's switch back over to the daily. And you can see we've put in this kind of bullish engulfing pattern right on the trend line, but I'll come back to this. Let's first just go through some data from out there today. So looking at the heat map, we can see pretty good breadth today, unlike the last week or so where we're constantly having these mixed breadth today. Apart from the banks, we're pretty much green across the board. We did see a pretty good jump in utilities and REITs, which had been oversold. Same with defensive stocks. Also, defense stocks did well as health. So we had a bit of the defensive sector have a bit of a pop here today. We also had Tesla come off. You saw me say yesterday this is what I was expecting for Tesla to break down its trend line, and their investor day could be the event that does it. And we had Tesla actually finished down over 5% today, almost 6%, and that's that trend line I was talking about, but I'll come back to this later. Basically, it's kind of a bit of an underwhelming Master Plan 3 event. Elon didn't reveal a design or specifics about their Generation 3 upcoming car, and just sort of said they'll have a product event for that. So they will just kind of go over some technical details of their sustainability drive and all that. So it was a little underwhelming, and since we had such a good run into it, it was no surprise to see that sell off as I forecast. Also had Fed President Raphael Bostic today say he's open to the possibility that if economic data comes in stronger than expected, there will be a case for more higher interest rates in the coming months. So he's still in favor of 25 basis points, but he actually wrote an essay Wednesday. He believes the Fed needs to raise its policy rate by 50 basis points. He wouldn't firmly commit to a policy rate until the meeting, and if data come in stronger, he will need to consider upward move. So basically, he's hinting at they could go higher than 25 basis points. And we've had a bit more data come out today actually confirm that, and looking at Fed Fund futures market, that's been trending in that direction as well. Moving on, had activist hedge fund manager Dan Loeb take a passive stake in AMD, in the chip maker, which has underperformed compared to its peers recently, not as bad as Intel. So that'll be interesting to see what he can do with that stock. Mortgage rates jump back up over 7% as inflation fears drive yields higher. So this is what we've been predicting. And now got the average rate in a 30-year fixed mortgage jump back over 7% Thursday to 7.1. Growing fears and inflation is not cooling and pushing bond yields higher. And that's going to have a pretty big impact, as we've been talking about, on the housing market and home builders and consumer discretionary spending too, with credit card debt at highs. So to give you an example, for a buyer purchasing a $400,000 home with 20% down on a 30-year fixed, the monthly payment, including principal interest, is now roughly $230 a month more than it would have been a month ago. So that's significant for a lot of consumers. And that's got some strong momentum behind it, no signs of stopping. Economic data are out today, continuing to see a tight jobs market. Jobless claims came in 190,000, better than expected, 195,000. Unit labor costs were up double than expected. and productivity was down. So that's again downward pressure on supply and a tight labour market. This is all a good recipe for the Fed to keep their foot on the gas and properly get on top of inflation and front load it instead of waiting to a weaker economy where they can't kind of stuck and they can't increase the rates anymore with high inflation. Fear and greed's pulled back today. We're now at neutral 49, which is overall, I'll get into more. The markets are in kind of a neutral zone right where we sit. Looking at options market, Tesla, huge day as normal. It's always the biggest one, but today it was an absolute monster. Almost 3 million contracts swapped hands, 58% of them calls. We also had Apple, Nvidia, Amazon, the usual suspects, and Silvergate, which I'm going to get to, was the monster today, down 57% because they delayed their annual report and apparently going to revise their numbers downward, which totally freaked the market out. And so I think this thing could be structurally broken out, which I'll get into in a bit. Salesforce was up there today in the most actively traded options, up 11% on great earnings, and Snowflake off 12% as well, which we're short in our equity long short strategy for clients. So that was a good move. Okay, so back to the charts. Now let's go back up to SPY. Okay, so bounced off this trend line. I'm going to come back to this in a bit, but this is where we're at today. Same with the Qs. We've gapped down but have held, and that's what I was talking about yesterday, I suspected. So we'll come back to this in a bit. International indices have held as well. Still got the FTSE above the 50 bar. Same with the Euro stocks and the Nikkei, although Australia and China and Canada are still under, so half above, half under. Volatility, much of the same, trending down. Now we've got a fix at a 19 handle, so we've lost that 20 handle on the VIX, and that's put on a big bearish engulfing. So started the day high, and just much has been the theme all year. High volatility has just been taken advantage of, and the dips have been bought in the stock market. Volatility of volatility is right here down at the bottom of its range too. So, and realized volatility broke down to new lows as well, down low 15% implied annualized volatility in the market. So there's not much actual volatility in the stock market right now. Put call ratio at 108, so still a few puts being bought. Breadth 20-day moving average, 20 stocks above their 20-day average, and this is typically what we see at short-term bottoms. So we look like we've rounded out and could be bottoming out here in short-term breadth. And stocks above their 50-day average seems to have pulled back to a similar level where we've had previous pullbacks as well. Moving forward, spread charts holding on pretty good. High beta versus low volatility, growth versus value. I mean, this could be it in terms of the pullback and this rotation trade, and we could continue on in this rotation into growth here because we've done a reasonable pullback on the growth versus defensive. And small caps have got a lot of momentum in them this year versus their large counterparts. Yield curve had a bit of a pop today, and now we've got the high yields versus treasury, similar duration bonds now back above their 50 bar VWAP. And the 10-year had a good move today. We got up to 4.08%. So that was a big move of the 10-year, but the Fed Fund futures had a little pullback. They didn't do the same as the 10-year. So just pulled back, but in a narrow range. No big serious dip here just yet. Got international yields breaking out as well. You can see over here in the UK government bond 10-year and the euro as well. High yield still sitting below its trend line here, but it did hold the morning pretty well, and we actually closed above yesterday's close. So this high yield could be holding here, although we did have a dollar up 0.5% and holding the top of its range. Bitcoin not doing much. Commodities came off a little bit. Dr. Copper just gapped down a little bit on a small doji. Over to the stock sectors. Okay, so you can see there were some negative ones here. Regionals down, because this is made up of, it's got Signature Bank in here, which was down a bit today in sympathy with Silvergate because they hold a little bit of crypto deposits. as well. But the winner today was utilities. So look at that. We'll come back to that. We'll just go through each of the sectors so we just get an idea of the market overall, the internals on all these sectors and the patterns they're doing. So we've got ARC here, still below its 50 bar. Clean energy, tech just closed just above. Discretionary, semis, bots, communication, retail, biotech. Energy's popped up a nice little bit here and holding its support. Oil and gas. Materials now looking good. Gold may have bottomed there. Financials put in a hammer. Regional sold off with Silvergate. Industrials looking good, trading up towards the top of its range. Transports on a big bullish engulfing. Same with REITs. Home builders just holding on a little bit. Jets. Defense, I like defense stocks, moving back up to the top of its range near its all-time highs. On volume, pretty good move there today in defense stocks. And defensive sectors. So this is healthcare. So we've come down to the slow and looks like it could be putting in a bottom here. Same with staples after that hammer formation we had yesterday. And utilities. Good move up to close above yesterday's high. So that's interesting because we know these have been oversold pretty hard over the last week or so. BlackRock barometer holding there as well. Apple much the same. Microsoft, Amazon, Google had a good nice little move up 1.8% today. Looked like it could be found a bottom here off this support. Meta just kind of consolidating up here. AMD with Dan Loeb taking a position and it had a good nice little move up today. Nvidia is holding here. Pretty good price action for where it is. Netflix couldn't really find a bottom. Same with Alibaba and Tesla. So you've seen me been talking about this, and I said, same for a week now, don't be surprised if we see a down move today, 5, 6, 7, 8%, which is exactly what we've had today. And that's what caused the market to gap down. So that underwhelming investor event, it was kind of already, price had run up so much into it. But if we go down to the 15-minute chart, and it was just bought on big volume, 17 million shares in the first 15 minutes. Ran up and hold, didn't even come back down to test. So once again, like always, the dip is being bought in Tesla. So, and I already had this line in here. I didn't draw this in today. And it's gapped down on it and held almost to the tick. So this could hold here at least for a few days. We might come up and fill this gap up here, retest back up here. We might fail back up at 205, and then we'll just have to judge from there. So I wouldn't be surprised if over next week we come and tag the 50 bar VWAP. But for now, with low conviction, I would say it's holding just this level for now. Moving forward, meme stocks overall pretty good except for AMC, still falling after its earnings. Big Bear AI came up a little bit, and not much else to report there. Active today, we had Macy's on bit better earnings than expected. EPS came in 18% above estimate, and stock up 11%. It was pretty good for retail discretionary. Dell's reported a little bit better than numbers, and after hours are just off 3%. Marvel Tech actually reported worse than expected, not by much, but they're off 6.4% after hours. Silvergate, this is nasty stuff right here. This is why I don't mess with crypto related stuff. I know everyone's got their own opinion on that, and if it works for you, great. For me, crypto doesn't work for me, so I avoid all this stuff. And because Silvergate, they leveraged themselves so much to the crypto industry and took deposits, they've just delayed their annual report and said they're going to revise their numbers down. That's like the worst thing a stock can tell the market, and you can see the market's reaction down 57%. From a technical perspective, typically when you see this kind of stuff, the stock's kind of structurally broken and on life support, and might hang around for another year or two. But I wouldn't be surprised to see this thing go down to $1 or $2 per share and it'll have its hype runs like this, short squeezes, whatever you want to call it, and then it'll just fall over again like AMC and GameStop. So I wouldn't touch this with a 10-foot pole, but unfortunately there's probably had a lot of people caught up in this because we're looking at 57 million shares today, so that's nasty stuff. Snowflake, we were short this in our client portfolios. We're down 12% today and still overvalued, still holding this short. Salesforce did really well today, did sell down off its open, but still ended the day up over 11% on pretty good numbers. 23% better than expected EPS, and revenue up almost 5% better than expected as well. So they are pretty strong, and that's what helped the Dow up today because they're a Dow component. Okay, so over to the market. Looking at the SPX, I already had this trend line drawn in. I had it drawn in since back over here, since late August last year. We already had this one. It's been bouncing off, and look at this, it's just held there today on kind of a bullish engulfing pattern. So you heard me say yesterday that while I was still bearish overall, because there's still a lot of reasons to be bearish with what's happening, especially with what's happening in rates, the market kind of had its chance. It had its chance to flush, dive, and it just couldn't, just choked up with all these little dojis. And that's a sign of indecision. It just every time the market would go down, okay, like here we go, we're about to dive, nope, bought, dip bought, dip bought, dip bought, and dip bought, just like Tesla. So there's just for whatever reason there is just bids in this market. It just didn't want to crack. Had a chance to crack, but it just looked like it didn't. So I'd been heavily short all the way through here, and on today's gap, I thought, this is it. Like if we can't move through this opening gap and sell off, or if this gap holds, then that's it. This will give me conviction this is a short-term technical bottom. And as soon as I saw it hold, I tilted the portfolio. I was 80% net short. I used it to cash in some shorts, which was pretty good, and tilted the portfolio back to market neutral. And that's just because I don't know, and I think the market is actually in an overall neutral stance. We're kind of like right in the middle of this range here. It's too hard to get bullish, and it's too hard to get really bearish because we've had about a 50% retracement of this move, and it just looks like it just keeps being held and on this trend line as well. And we've still got a lot of mixed signals. So if we turn on our trend candles, on the daily, we're confirmed bull. On the medium 3-day, we're confirmed bear. Same with the long-term weekly. And if we go over to the Qs, long-term bear, medium-term bear, short-term bull. But we're mixed on Dow, short-term bull, medium-term bull, long-term bear. So the market's kind of really in this kind of neutral, just holding pattern here with bids. If this support, like we already had this support line drawn in, that could still crack, and I still could see a flush coming up, which would catch everyone by surprise. Because this technical, across the board today, we're seeing a lot of this bullish engulfing. A lot of these oversold defensive sectors put in really kind of bullish technical bottoms today on some pretty good volume, and we've had that 50% pullback, and we're coming into towards the 10th of March, later next week and early the week after that, we're going into a bullish seasonality, and 10th of March into the end of March, early April is a bullish seasonal period, and we can see that with our seasonality starting to turn towards flat. Same on VIX as well, it's come in. So the market kind of had its shot to sell off with these higher rates, but looking at the breadth now, looks like we might have just bottomed in the short term. The amount of stocks above their 20-day average is starting to turn where it turned last time in mid-December. But these rates, the 10-year is climbing. This can't be good for the stock market. So unless we get any good pullback in the Fed fund futures or rates, which means we would need a pullback in jobs and inflation data, which isn't the trend. So the trend's up on the jobs market and inflation, and so is rates, and so is the dollar holding here as well. So that prevents me from getting net long. But we did put in a little short-term technical bottom here, especially on these defensive sectors. That's utilities, staples, and healthcare. So I think we could have a little bump back up over the next days and into next week. But I would be, all things being equal, with rates still moving up, I would be looking to short the top of this range or 50% pullbacks of this retracement. If we do go back up here, I would most likely be looking to tilt back net short in anticipation of this move continuing lower. But for now, the market just looks like to be in a bit of a holding neutral mid-range zone, and thus I'm positioned completely market neutral, equal amount of longs and shorts to reflect that view. Okay, just before I go, I just wanted to show you guys our strategy, equity long short. If you want to follow, it's just $60 a month and get all the real-time alerts to your email, phone. You can pay a little bit extra, have it automatically trade in your Interactive Brokers account. We host this strategy on the big popular platform Collective 2, and so far we're up 10% year to date, absolutely smoking the SP 500, and it's only with a little bit of leverage. 1.36 is our average. We're tracking on a Sharpe ratio of 4.4, the correlation of 11% to the market. It's net collecting dividends, and we're ranked number 51 on Collective 2 out of about 1,000 or so systems. So it's doing really well, and I've got the link down below in the description for this video if you're interested in following along. It's a long-short portfolio. You can come and read the description here. We've always got 10 stocks long, 10 stocks short, so we're completely market neutral. And that's what gives us a really high risk-adjusted return and low volatility. You can see the max drawdown we've had is 4.1%, even though we're up 15.7%. So we're beating the market with much less volatility and risk, which is really good. And this is a great way to follow a classic hedge fund trading strategy that I've developed over many years. Okay, so that's all for today. Thanks for tuning in. Really appreciate all your support, and I hope to see you tomorrow after close to talk about tomorrow's price action. Take care out there.